Greetings traders out there in Traderland. My name's Dez here at Grok Trade, and this is the weekend edition. This video is good through Sunday, March 4th, 2012. And the markets for the week continue higher. On the daily chart on the S&P, we have a rising wedge. You can see the two blue lines coming higher here. We're missing hitting this upper blue line. By more and more, that puts us into a rising wedge. To confirm that rising wedge, we look down here at the MACD centered oscillator, and we see a major bearish divergence also being made. It has been over 40 trading days since we've had a 1% drop in the markets. Markets are deemed overbought at this moment, and we're looking for some sort of correction and relatively soon. Right now, we saw relative weakness on Friday's closing below a major support line. With that said, I believe that is the crack in the ice, and I'm looking for some droppage to take place here. We are finding support at the 8 EMA, so we are very, very bullish to be continuing to find support at the 8 EMA. Things that go up fast tend to drop fast, so be looking for some sort of correction probably pretty soon here. On the weekly chart, we have this ginormous run. It's a big one. So we have this big symmetrical triangle. We run up, bust through it, and continue higher. I'm still looking at 1352. If we get a close below 1352, that's going to be problematic for the markets as a whole. All major oscillators, including the MACD down here, are registering overbought levels. The markets need to retrace to some degree. Here, I just put in the Fibonacci levels. If we do get a correction relatively soon, be looking at an area of support at 1323. After that, maybe as low as 1293. I think that the 1320s area should act as a level of support. I would like to see that due to this major trend line coming down. So that's what we're looking at for a possible correction. On the monthly chart, we're just getting started here, going into March, and we have an area that we're looking at coming across here at 1364. That's this area, 1364. We need to stay above that 1364 level and continue higher. I would really like to see us get higher than 1378, preferably 1380 or higher. That means we need to continue upward at this spot. Now on the NASDAQ, going to the daily chart, we are remaining above all major moving averages in the 8 and the 11 EMAs. On the weekly, we're much higher, not looking too bad. I am still looking at this 2921 as an area. If we close below that, we're in a lot of trouble. We're very extended now on the weekly chart. On the monthly chart, popping up, and we have virtually an equal high here at the 3000 mark. If the markets continue to drop, that will give us a tweezer top reversal pattern, and we will see a significant, or could see a significant sell-off right after that. When it comes to the banks, financials, on the daily chart, we're now below the 20-day moving average, and we are starting to find the rising 50-day moving average. We need to see if that will hold as support. On the weekly chart, we've already made a lower high, lower low. I drew a line at 1719. 1719 was the area that I'm concerned with. We closed on Friday at 1717. This is problematic. This is the thunder in the distance, and the financials are showing relative weakness, and the markets are only as strong as the financials, so this is your warning. I, at this point, have put hedges on my institutional money, and the markets, if they do start breaking down, I expect there to be a decent retraction. Now, with that, keep in mind that anything can happen. The markets have been bullish, but we are seeing some problems. Now, on the monthly chart, we're just getting started again, but we're already in the red starting off this month. We need to find if the 20-day or 20-month moving average can act as support. Now, for you gold bugs out there, On the monthly chart, we did find support at this major trend line. We popped back up, and right now we sit at 166. On the weekly chart, we have really dropped quite a bit. So this week was bad for gold. We're trying to find support at the 20-week moving average. The question is, will we find that? We could find ourselves back down here at the 160 level pretty fast. On the daily chart, we had this big breakdown of the rising wedge, and I showed you the rising wedge last week, said watch out for that, and there it was, crash. So Wednesday was bad, Thursday we hung in there, Friday we hung in there, but we're caught up in these major moving averages, and it looks like gold could be in trouble. Now, a couple things for you. On March 8th, which is next Thursday, we're doing a webinar on hedging. If you want to join us, click on events on the website and get registered through that. It's $147. However, if you want the same sort of training that's a year old, you can get a discount by going to teachmetehedge.com and get a recording for $97. Again, that's teachmetehedge.com. Thank you for being a part. And to all those who are in Vegas with us this week, what a fun time. You guys are great. And it was a packed room. Lots and lots of people. Anyway, yeah, great. Hope you guys can join us next time. If you're interested in the mentoring, just send us an email at mentor@groktrade.com. Take care, guys. And if you would, really focus on risk management. And remember that capital preservation comes way before making money in this market.